Welcome to Astroverse, your premier source for in depth trading analysis and market insight. In today's episode, we embark on an extensive exploration of financial markets, covering currency indices, individual currency pairs, commodities, and key economy data. Whether you're a seasoned trader or a curious observer, we have got you inside. Let's deep dive into the enlightening journey. Let's do a market keep recap for currency index analysis first. Before we delve into the specific currency pairs, let's go through thoroughly examine the performance and influence factors of individual currency indices. The US dollar index Dixie displayed remarkable strength throughout the week. It commenced at 105.5, concluded an impressive 106.175, even reached a peak of 106.800, 106.900. The strength can be attributed to several key factors. Positive Positive indicators exemplified by the August durable goods order, which exceeded expectation by surging 0.4%. Treasury yields, which though they had recently soared to heights not witnessed since 2007, experienced a slight retracement to 4.521%. The robust performance of the US mirror robust economy data releases and a heightened expectation in market regarding potential interest rate hikes by the Federal Reserve. Now, let's jump on Japanese currency index. The Japanese currency index underwent a modest decline during the week while the Bank of Japan BOJ maintained its monetary policy. The yen felt influence of global factors, including the enduring strength of the US dollar and no signal from the Bank of Japan on increasing rates anytime soon, and still standing behind the government stimulus. Now, let's jump on the British pound. The British pound currency index witnessed a significant fluctuation, primarily influenced by the Bank of England's decision to suspend further rate hikes as CPI came out lower than expected, and the UK's economy not being as robust as the US. With the looming possibility of a recession, the decision prompted the pound depreciation against the US dollar, signaling a recalibration of expectations regarding a future rate hike movement. Now, with a comprehensive understanding of the current currency indices, let's conduct an in-depth analysis of individual currency pairs. The Euro USD pair experienced a recent downtrend, a consequence of lower inflation rates. With the Eurozone and the cautious projection of the European Central Bank, this downward trend may persist if the US economic data continue to strengthen, further reinforcing a market expectation of an earlier anticipated interest rate hike by the Federal Reserve. In this scenario, the performance of the US dollar index will be a pivotal play in steering the Euro USD pair, with more data coming out strengthening the US dollar. GBP USD pair. GBP USD pair encountered downward pressure due to the Bank of England's decision to halt the rate hikes, coupled with a growing concern about the economic outlook of the United Kingdom, with a chance of recession. Should the UK's economic condition deteriorate further while US data remains robust, GBP USD will continue to come down further, much like the Euro USD pair. The performance of the US dollar index Dixie will be a crucial determination of this pair's direction. USD JPY pair exhibited an upward trajectory during the week, largely driven by the BOJ's stable monetary policy by keeping interest rates at negative 0.1% and providing no timeline on when they will stop stimulus. This bullish trend could continue if the US economic data aligns with the market expectation of a forthcoming Federal Reserve rate hike and the signal that they will keep rates higher for longer. Along the side, the performance of the Japanese currency index and DXY, the US dollar currency index, will be a contribution factor for this pair's movement. GBP JPY. Similar to GBP USD, GBP JPY sustained a short-term bearish move, largely attributed to the Bank of England's policy decisions and the prevailing economic uncertainties in the United Kingdom. Movement within this pair will be guided by economic data released from the UK's Bank of England. on what they will be doing for the future. While the influence of Japanese currency index remains secondary, this should not be an overlooked. GBP is still on a bullish trajectory. The pullbacks were expected. Nikkei demonstrated a remarkable resilience, backed by the BOJ's consistent monetary policy of not increasing rates and the presence of a robust economic indicator in Japan. Nevertheless, it's essential to acknowledge that any unexpected negative surprise in the US unemployment data and potentially it could potentially affect the Nikkei's performance. Additionally, the JXY may impact investor sentiment within the Japanese equities market if BOJ gave any signals on the possibility of a rate hike, a timeline on when a timeline when they're going to stop their stimulus. US30, the performance of US30 has largely been bullish for the past few months and even beating expectations, largely due to the market investors being bullish and expecting a possibility of the Federal Reserve decreasing rates. Even though the rates are high, the market has been quite strong. We had pullbacks down to 33,000 after the Fed signaled the possibility of a rate hike and keeping rates at a higher percentage throughout 2024 and 2025. Look for data releases to get a better outlook on what to expect. XAU-USD gold. The price of gold has been in a decline due to the US dollar being strong as the economy is resilient, and the dollar's future look more bullish as the Fed has signaled possibility of a rate hike and keeping rates higher for longer through 2024 and 2025. Rates being higher for longer plus a strong economy with no geopolitical event aside from some headlines from China, combine them all, we can see the demand for a safe haven like gold is going to decrease. Investors will be looking to put their money into more risk-based assets. Now, let's jump on a weekly analysis and trade ideas on what to expect for this week. As we look ahead to the trading week of October 2nd to October 6th, we can delve into the expectations and forecasts of various currencies and pairs and key market indicators drawing insight from previous parts, which watch these news events as they may have high impact on the markets and will affect the pair you trade. Be vigilant on these data releases. Do not trade on the news drops. Now, let's see what we can expect for each currency pair. Now, first off, we have Euro USD. Expectations this week begins with the Eurozone manufacturing and services PMI data, which can expect to remain steady. Investors will keenly watch for any surprise in these figures. Furthermore, the speeches by the ECB President Lagarde will continue to monitor for any hints at changes in monetary policy. Now, forecast. The Euro USD pair has been in a recent downtrend largely due to the lower inflation rates with the Eurozone and the cautious stance by the European Central Bank, ECB, if the US economic data continues to strengthen, reinforcing the expectations of an earlier Federal Reserve rate hike, this downward trend may persist. What can we expect? Well, now let's jump on to see what price can do. Well, we can see price come to 1.06 before having some sort of reaction, or even push further to 1.06, 150, and then coming down. This is a high risk, high reward zone, and we can see price having a decent reaction. We need price to just continuously show us signs of it coming down before we can jump in. This is a high risk, high reward, so it would be best to wait to see once price hits this level, come down and then retest 106, then we can jump in sells. Safer sells will be below 1.05 650, and even safer sells will be below 1.05 500. So now let's jump on other pairs and see what we can expect. Well, now let's jump on GBP USD. GBP USD expectation. The UK construction PMI and Halifax HPI data are expected to provide insight into housing market. MPC members speeches will be noteworthy, offering potential hints about the Bank of England future policy decisions. Now for forecast, GBP USD pair has faced downward pressure recently due to the Bank of England's decision to hold rate hikes and concerns about the UK's economic outlook. If the UK's economic conditions deteriorate further while US data remains robust, this downward trend may continue. What can we expect price to do? Well, we can see price have a short-term pullback to 1.22350 or 1.22650. It would be best to see what price does here and then getting sells below 1.22350. And safer sells will be below 1.21850, and even safer sells will be below 1.21650. Watch the market and watch the economic activities and see what price does. Now let's jump on another pair. Now let's jump on USD JPY. Well, USD JPY, Japanese data including average cash earning and household spending may influence the yen. In the US, unemployment claims, trade balance, and non-farm payroll will be significant. USD JPY pair has shown an upward trajectory recently, primarily driven by the Bank of Japan's stable monetary policy and positive economic indicators, and Bank of Japan keeping rates at negative 0.1%. and showing no signs of increasing rates anytime soon. No signals, no nothing. So this bullish trend could continue if US economic data aligns with the market expectations for the forthcoming Federal Reserve rate hike. There's a possibility that they may increase rates, and they have also signaled that they're going to keep rates for a longer period of time through 2023, 2024 and 2025. Now, what we can expect on the charts? Well, we can see price do a short-term pullback to 149 before having reactions, and we can grab high risk sells at high risk buys at 149,200, and safer buys will be 149,500 and even breaking 149,600. We can catch these sells even above 149,800. We can continue the bullish trend, as we can see where price has been doing. This short-term pullback was not out of the ordinary. We have seen the possibility of we have seen this in the past. This was due to the expectation of UADA might be changing its monetary stance. Now let's jump on another pair and see what we can expect. GBP JPY is also the same case as the other pairs. What we can expect, similar to GBP USD, the GBP JPY pair will be corresponding to UK's data, including construction PMI and Halifax HPI. In the US, a series of economic activity can influence the pair too. The GBP JPY pair has been on a downward recently, largely influenced by the Bank of England's policy decision and prevailing economic uncertainties in the United Kingdom, with the possibility of a recession. Them keeping rates the same and not going to increase rates causes a short-term pullback on GJ. We can see price pushing higher due to the pound being much stronger and yen keeping rates at a negative level, with no signs of rate hikes anytime soon. Watch data releases and make decisions based on them. Now, what we can expect for price to do? Well, we can see price have a short-term pullback to 181,800 and then bounce off and start to push back further up. We can carry these buys up to 184,200. Safer buys will be above 182,500. We can also have high risk, high reward buys above once we do a retest of 181. But this would be quite risky, as we can straight away break and come down and push further down. So it would be best once we have a price reaction at this level, we see what price does, and we can grab these at 181,200 or 181,500. Watch what the economy activity is and how the price is moving before making a decision on what to expect. Now let's jump on another pair. Now a decision on what to expect. Now let's jump on another pair. Now for Nikkei, well, Nikkei, Japanese data, notably average cash earnings and household spending, can affect the Nikkei. In the US, NFP, unemployment change and unemployment rate will be closely monitored, as this can affect the Japanese markets too. The Nikkei has demonstrated resilience recently due to the BOJ's consistent monetary policy and easing, with them keeping rates at the negative level for a longer period of time and with no indication of increasing rates, and the presence of robust economic activity in Japan. What can we expect price to do? Well, price has come to 31,700 multiple times but hasn't broken it. If once we break, we can see price come down further, but this could be with the data coming out this week, but it would be best to see what price does at 32,000, and I expect price to push further up. Safe buys will be above 32,000, and safer buys will be above 32,150. Watch what the price does, and you can make a good assumption on what to expect. Now let's jump on another pair. For Dixie, as long as Dixie stays above 105 500, we can start to see price to continue to push further up, as the US economy is quite strong, and data has been supporting it in the past few weeks and months. And there is also a possibility of the Federal Reserve increasing its rate by a 0.25 or 0.5. They have given signals on what they're going to do in terms of keeping rates higher for longer through next year and the year after. Now, Dixie has been on an upward trend, could persist, significantly affecting various currencies and pairs and commodities. You can closely monitor US economic data and Federal Reserve communications for hints about the future monetary policy. What I expect for Dixie to do is have a pullback to 151 600 650 and then push up, or straight away continue pushing as it has been for the past few weeks. As you can see, if every time price has made a high, price has come down to retest a level and then started to push. We can see the same thing here, and then it came down, we retested these highs again and then started to push. So we can continue seeing this trajectory for the next few weeks and months, as there is no reason, there's no geopolitical activity in the US or anywhere else that could influence the dollar and its other currencies. Now, let's jump on US30. Well, US30 is expected to continue dropping further due to the possibility of a rate hike, and the Fed signal that they're going to keep rates higher for longer. We may also see the possibility of a government shutdown, but they seem to have come to a short-term agreement. We can see price has been pushing down for the past few days and week, and price could not sustain above 35,000. So we can expect price to come and do a retest of 34,000 and then come down, or we can have straight melts below 33,500. We can also get the high risk sells at 33,750, but I would potentially wait for price to retest at least 33,850 or 34,000, and then seeing reactions at these levels before making or jumping into sells. It would be best if price straight away comes down and breaks 33,400, or we have a short-term pullback and then price coming down. Watch for economy activities before making a decision on what to do next on US30. Now let's jump on gold. For gold, we have been seeing a downward trend due to how the economy activity is been going on in the US. Gold is expected to continue dropping further due to the possibility of a rate hike. As mentioned before, the Fed has signaled that they're going to keep rates higher for longer. Gold prices may be impacted by the development that influences investors' confidence in safe havens. We are currently they're not afraid in the market, so they're not expecting to put their money straight away in gold. So we can continue seeing gold price to come down further, but there's no reason to count out the fact that we may have pullbacks. The dollar data has been, the US dollar has shown to be bullish in a bullish structure, and with more data coming out showing that the economy is still resilient and showing no signs of slowing down. Although the Fed expects it to not continue like this for the years to come, and the economy to slow down as time passes, aka the lag effect. So what we can expect for gold to do, I expect personally price to go to 1864 before having some sort of reaction and coming down. If we break below 1845, we can straight away come down, but it would be best to see what price does at these levels, and I would personally wait for a pullback before jumping in sell straight away. It wouldn't be out of the ordinary for price to just do a small pullback. As we can see here, price did a small pullback to these levels and then started to drop a significant amount. We have to wait for market and the economic news to show us what the price is going to do next. So we can see price go to 1855 before having some sort of reaction, but I would personally wait for 1864, and then once we have a retest and or break of these levels, I jump in sells, or straight away sells at this level once we have some sort of reaction similar to what we have had here, or at least here. So we need to see what price does. And for buys, I'm only expecting buys above 1876 before, and not expecting buys anywhere else above these areas. As long as we keep below 1875 and 1876, I don't expect to be jumping in any buys anytime soon. A decision on what to expect. If you found this analysis valuable, please like and subscribe and hit the notification bell to stay updated with our latest market insight. Thank you for joining us on Astroverse, and we look forward to seeing you in our next market update.